Imagine this. All over the world, money is changing its rules. Quietly, almost invisibly. Banks, governments, and big companies used to control money. But today, that control is slipping, and most people don't even notice. Something huge is happening in finance. If you think it's just another stock market crash or interest rate hike, you're missing the real story. This isn't a prediction. It's already happening. So the mystery is not whether the system is changing. So the mystery is why almost nobody is talking about the real shift. To understand what's happening now, we need to rewind to the moment modern finance made a deal with itself. After World War II, the world made a deal. Countries would tie their money to the US dollar and the dollar to gold. Banks would be trusted middlemen. Governments would step in to fix problems. Money seemed safe. For decades, this worked. But in 1971, the US broke the gold link. Money became fiat. It only worked because people believed in it. Confidence became everything. Every financial crisis after that, like 2008, was fixed by printing more money and lowering interest rates. The system seemed unbreakable, but each fix made the next problem bigger. After the 2008 financial crisis, central banks printed trillions of dollars to save banks and markets. This was called quantitative easing. Interest rates dropped to almost zero. The goal was to help people borrow money and invest. But instead, most of the money went into stocks, real estate, and other assets. At the same time, technology changed everything. People could now send money instantly, invest online, and move assets without a bank. The system was slowly shifting, but almost nobody noticed. From 2010 onwards, three things happened at the same time. Debt exploded. Governments, companies, and people borrowed more than ever. Debt became normal, even necessary. Asset prices grew faster than wages. Houses, stocks, and other investments became more valuable than actual income. This made rich people richer, while most others struggled. New financial systems appeared. Digital money, online trading, and decentralized platforms started moving money outside traditional banks. People ignored it because the old system still seemed stable. But underneath, the rules were changing. The pandemic tested the system. Governments and central banks created even more money to help people and businesses. At first it worked, but then inflation hit, prices went up everywhere. Central banks had to raise interest rates quickly. This caused trouble. Companies and banks with too much debt started struggling. Some banks and financial services began to fail. Money began to move differently, seeking safety and stability. The old assumptions that central banks could control everything were no longer true. As money became picky, it moved where it was safest. Banks became careful. Credit was harder to get, the big change. Finance is becoming fragmented. Money no longer flows through just a few big banks. It can move through multiple platforms, countries, and currencies. Trust is shifting from institutions to systems. People started protecting themselves by holding money in multiple ways. Different currencies, digital wallets, alternative investments. This is not rebellion, it's smart survival. Governments and central banks are still trying the old tricks. Raise or lower rates, print more money, guide markets. But these fixes don't work like they used to. Capital moves faster than governments can react. Technology allows people and money to bypass old systems entirely. In the past, every time trust in money weakened, like in ancient Rome or during currency crisis, the system failed. Today's world is similar. Wealth is concentrated in few hands. Liquidity dries up quickly when confidence falls. Correlations spike, everything moves together in crises. Pattern is clear. Centralized systems struggle when people can act outside them. The biggest finance shift happening right now is this. Trust is moving from institutions to systems. Money moves through networks, not just banks. Contracts and transactions can happen without a middleman. Capital adapts faster than regulations or governments. This doesn't mean banks disappear, but they now compete with faster, smarter systems. Debt creates fragility. Years of cheap money built a system that can break quickly. Watch where money goes. Markets reveal truth faster than statements from officials. Financial literacy matters. Understanding how money works is now more important than just owning assets. The danger isn't a sudden crash. The danger is assuming tomorrow will be like yesterday. System is quietly changing, and by the time everyone notices, the opportunities to protect yourself or profit may be gone. If you want to understand how money, power, and risk are really evolving and not be caught off guard, subscribe to the channel. The biggest shifts in finance don't announce themselves. They happen quietly while everyone is distracted.